Stop what you're doing for a moment, because what is happening in the silver market right now is not just another price move. It looks like a simple climb toward a 1-month high, the kind of movement most people scroll past, but that assumption is exactly what makes this moment so dangerous to ignore. Beneath the surface, something far more structural is unfolding, and almost no one is talking about it in the way they should. This isn't just about price. It is about pressure building quietly across the entire system, about supply that can no longer keep up, and decisions being made behind closed doors that are starting to reshape where silver comes from and who controls it. If you wait until this becomes obvious to everyone, you are already late, because by the time the headlines catch up, the real shift will have already happened. So pay attention, because this is the kind of moment that only looks small right before everything changes. And once you see it, you'll start to realize this isn't a spike at all, but the early signal of something much bigger beginning to unfold in plain sight right now. Don't look away now. If you only look at the price, it's easy to miss what's really happening. Silver pushing toward a 1-month high might seem like a routine rebound, especially after the kind of correction we've already seen. Prices surged aggressively, pulled back, and now they're climbing again. On the surface, that looks like normal market behavior, but it isn't. Just step back for a second and look at the contrast. Not long ago, silver was trading at levels that felt stable, almost predictable. Then, within a relatively short window, it exploded upward, shocking even experienced investors. After that, the pullback gave people a sense of relief, as if the market had cooled off and things were returning to normal. But now, with prices climbing again, that sense of normal is starting to break. Because this rebound is not happening in isolation. It's happening after a surge that reset expectations and during a period where the underlying conditions have not improved. In fact, many of them have tightened. That's the part most people overlook. They see movement, but they don't question what's driving it. Price is not the story here. Price is the signal. It's the market's way of reflecting pressure that's building somewhere deeper, somewhere less visible. And when you see a market rebound this quickly after a correction, it usually means one thing. The forces pushing it upward never actually went away. So the real question isn't why silver is rising again. The real question is, what kind of pressure is strong enough to keep pushing it higher, even after it already made a move that should have been enough to slow everything down. Now we get to the part that most people never see, because it doesn't show up clearly on a price chart. The real issue isn't volatility, it's absence. For years, the silver market has been quietly running a deficit, and not a small one that can be brushed off as a temporary imbalance. This has been happening repeatedly, year after year, with demand consistently outpacing supply. Think about what that actually means. Every year, more silver is being used than is being produced. That gap doesn't disappear, it accumulates. And over time, those small annual shortfalls begin to stack into something much larger, something structural. You're no longer dealing with a fluctuation. You're dealing with a system that is slowly draining itself. The only way the market has been able to function is by pulling from above-ground inventories, reserves that were never designed to support a long-term deficit. These stockpiles act like a buffer, giving the illusion that supply is stable. But buffers are not infinite. Every ounce that gets pulled out is one that cannot be replaced quickly, especially in an industry where new supply takes years to develop. This is where the tension begins to build, because as inventories decline, the margin for error gets smaller. There's less flexibility, less room to absorb shocks, less ability to respond when demand suddenly increases, and demand is not slowing down. If anything, it's accelerating in ways that make the supply gap even more difficult to close. So what you're left with is a market that appears stable on the surface, but underneath is becoming increasingly fragile. The longer this continues, the more pressure builds, and eventually that pressure has to express itself somewhere. This is why the deficit matters, not because it exists, but because it refuses to go away. It keeps tightening quietly, consistently until the point where the system can no longer hide it. And when that moment comes, the adjustment is rarely gradual. It tends to happen all at once, catching most people completely off guard. But if you think this is only about mining output and supply chains, you're still not seeing the full picture. Because what's shaping the silver market right now goes far beyond geology or production capacity. It's being influenced, quietly but powerfully, by diplomacy, by political decisions, and by a growing shift in how countries view their natural resources. This is where things start to get more complex. Major silver-producing regions are no longer operating in a purely economic framework. Governments are becoming more protective, more strategic, and in some cases, more restrictive about how resources are extracted, who is allowed to extract them, and where those resources ultimately go. This is what resource nationalism looks like, and it's becoming harder to ignore. Trade relationships are also playing a role. Agreements that once allowed smoother flows of raw materials are being reconsidered, renegotiated, or quietly constrained. When tensions rise between countries, even slightly, supply chains begin to feel it. delays increase, costs rise, and in some cases, access becomes uncertain altogether. Now imagine this happening in regions that already account for a significant portion of global silver production. A single policy change, a shift in leadership, or an escalation in regional risk can ripple through the entire market. And unlike price fluctuations, these are not changes that reverse overnight. Political decisions tend to linger. They create long-term uncertainty that companies and investors cannot easily plan around. This is the hidden layer most people overlook. They focus on ounces and prices, but the real question is control. Who controls the supply, under what conditions, and for how long? When you start to see the market through that lens, the situation becomes much less predictable and far more fragile. Because now, it's not just about how much silver exists, but whether it can actually reach the market when it's needed most. Now here's where the situation becomes uncomfortable, because it forces you to question how the market actually functions beneath the surface. Most people assume that when they see silver being traded, it reflects real, physical metal changing hands. But that's not entirely true. A large portion of the market operates through paper contracts, agreements that represent silver without requiring immediate physical delivery. At first, that system works efficiently. It allows liquidity, flexibility, and scale. But over time, something begins to shift. More claims are created than there is actual metal available to fulfill them. It doesn't happen all at once. It builds gradually, quietly, until the gap between paper and physical starts to widen. This is where the idea of coverage comes in. Imagine a system where, for every 100 ounces that people believe they own or can claim, only a fraction actually exists in deliverable form. That imbalance might seem manageable when demand is stable and few people ask for delivery at the same time. But the moment confidence shifts, the entire structure becomes vulnerable. Because now it's no longer just a market. It's a test of whether the promises can be honored. And if too many participants decide they want the real metal instead of the paper representation, the system is forced into a position it was never designed to handle. This is the part that changes how you see everything. Once you recognize that the market relies on confidence as much as supply, you start to understand how fragile that balance really is. It's not just about how much silver exists, but how much of it is actually accessible when it matters. And when that realization spreads, even slowly, it has a way of accelerating pressure in a system that is already stretched thin. While most people are focused on supply, something equally powerful is happening on the other side of the equation, and it's moving faster than almost anyone expected. Demand for silver is no longer just about jewelry or investment. It has quietly become embedded in the foundation of modern technology in ways that are difficult to replace and even harder to scale back. Start with solar energy. Every panel being installed requires silver for its conductivity, and global deployment is accelerating as countries push toward cleaner energy targets. This isn't a trend that pauses or reverses easily. It's backed by policy, funding, and long-term infrastructure commitments. Then look at electric vehicles. As production ramps up globally, silver is used in critical components that keep these systems running efficiently. Multiply that across millions of vehicles, and the demand begins to compound quickly. And it doesn't stop there. The rise of artificial intelligence and data infrastructure is adding another layer. Data centers, high-performance computing systems, and advanced electronics all rely on silver's unique properties. Every time technology becomes more advanced, more connected, and more power-intensive, it leans further into materials that can handle that demand. Silver sits right at the center of that requirement. What makes this different is that this demand isn't optional. It's not driven by sentiment or speculation. It's driven by necessity. These industries cannot simply switch away without compromising performance, and alternatives often fall short or come with higher costs. So, while supply struggles to keep pace, demand is expanding across multiple sectors at once. It's not one wave, it's several, moving together, reinforcing each other. And when you step back and connect all of it, you start to see why the pressure in this market isn't easing. It's building in a way that feels increasingly inevitable. When you step back and connect all of this, the price movement starts to look very different. What seemed like a short-term rebound or a temporary push toward a one-month high begins to reveal itself as something much more significant. This is not a market reacting. This is a market adjusting. Because every layer we've just walked through points in the same direction. A persistent supply deficit that hasn't been resolved, a geopolitical environment that's becoming more restrictive and unpredictable, a system where paper claims far exceed physical reality, and demand that is accelerating across industries that cannot function without silver. That combination doesn't create stability, it creates pressure. And when pressure builds for long enough, markets don't move gradually, they reprice. This is what most people are missing right now. They're waiting for confirmation, for headlines, for validation that something big is happening. But markets don't reward that kind of timing. By the time it becomes obvious, the majority of the move is already behind you. Right now, you're in that early phase where the signals are visible, but the narrative hasn't fully caught up. It still feels uncertain, still easy to dismiss. But that's exactly what makes it valuable to understand. Because once the broader market recognizes what's actually happening here, the conversation changes. And when the conversation changes, so does behavior. Capital moves differently, attention shifts, and prices don't ask for permission before they follow. So the real question is simple. Do you wait until it's undeniable, or do you recognize it while it's still unfolding? So when you look at everything together, the price, the supply pressure, the geopolitical shifts, and the surge in demand, it becomes clear that this is not just another market cycle you can casually ignore. This is a moment where understanding what's happening actually puts you in a completely different position than the majority of people who are still looking at the surface. Because most will wait. They'll wait for headlines, for confirmation, for someone else to tell them that this matters. But by the time that happens, the opportunity to truly understand it early is already gone. And that's really what separates people in markets like this. Not luck, not timing, but awareness. The willingness to pay attention when things are still unclear, when the signals are there but not yet obvious to everyone else. If this gave you a clearer perspective, then you're exactly the kind of person this channel is built for. People who want to think ahead, not react late. So stay connected. Subscribe if you haven't already. Share this with someone who takes this seriously, and be part of a group that sees what's coming before it becomes obvious.